Hey guys, Roland Kim here. This is the most important federal election for mortgage brokers. The Royal Commission, a federal election, a federal budget, it's all happening at the moment. But what does this mean for you, your business, or your career within our industry? So let's start with a really quick recap of the Royal Commission. Commissioner Hayne made 76 recommendations after a 15-month-long inquiry, of which the majority of these recommendations were well received and aimed to provide a better experience for Australian consumers, whilst also encouraging better competition and putting an end to misconduct. But of these 76 recommendations, there was one recommendation that the Commissioner got wrong. Hayne suggested that Australian consumers should pay for the service of a mortgage broker, not by the banks paying those brokers. So I'll skim over this as we know it's old news, but essentially this would have meant the service of a broker would have been only available to those that could afford it, making it a luxury service, and could mean that the major lenders would have increased their market share as people would have gone there directly, limiting the market share and healthy competition of many other financial institutions that brokers drive competition to. So luckily, our government saw through this, and our Treasurer confirmed that the Liberal Party would not be changing upfront or trailing commissions paid to brokers for a 3-year period, to then review things at that stage. That's if they're voted in, of course, as well. So what if they're not? What if Labor are voted in? What would Labor do? So if Labor are voted in, they've confirmed that they will retain upfront commissions paid by the banks, but trailing commissions will come to an end by June 2020. But wait, there's more. So Labor will also introduce changes to capital gains and negative gearing tax. So Labor plans to abolish negative gearing from a year yet to be announced for the purchase of established property. New property will be exempt from the rule changes. Labor also intends to pare back the capital gains discount for investors from 50% to 25%. And current arrangements will be grandfathered. So if Labor win, what does this mean for the property market and our mortgage industry? Will this drive growth, or will it put a halt to investment growth in our economy? Some experts are saying that this will further slow investment growth and in turn make it harder for first home buyers to get into the market. Others are saying that investors will buy like crazy for the next 6 to 9 months if Labor wins, and then stop before the new proposed tax date. Some economists seem to think that this could be really dangerous for our economy as well. Other economists have said a further rate cut is likely to happen by the Reserve Bank to reignite borrowing and property growth. We've also spoken with a number of our clients, probably over 50 different mortgage broking businesses in the industry, a number of senior leaders in the banks, who all seem to share the same view that Labor's changes are likely to slow down our economy and growth within the property market. There's a lot of information to absorb at the moment, so take it in. Make sure you make up your own mind. Be sure to put a lot of thought into who you vote for this year. It couldn't be more important for our mortgage broking industry. Thanks very much for listening, guys.